Hello everyone. On behalf of Thai Global Summit 2020, I Nidhi Baushe, Executive Director Thai Nagpur Chapter, welcomes you all to a track on the topic how do VCs raise fund? So there's always a talk, there's always a mystery, how VCs raising fund, structuring, regulatory thing. So let's demystify. And with that note, I am delighted to introduce our moderator, Dr. Rakesh Bhatia. He's the founder and CEO of The Capital Net, driving digital transformation in startup innovation and private investment ecosystem. Rakesh has over 2 decades of creating valuable business globally. He is also a scholar and researcher with doctorate in business administration from GEM, France, having research interest in merger and acquisition and sense making. So over to you, Dr. Rakesh.
Thank you, Nidhi. Thank you so much. Welcome all the panelists. It's an honor and a pleasure to have you on board for this discussion today. Uh, Pretty interesting topic that we have been assigned, or probably we have picked for that matter, because as Nidhi initially mentioned, while the startup funding itself is a very commonly spoken about topic. Everybody knows what happens there. Everybody talks about it. There's so much available. Uh, uh, it still remains a mystery what VCs do, right? Where are they getting the money? How are they investing? Why do they invest? How are they structured, and so on and so forth. So we will be having a lot of fun discussion around these points. And before we get into the conversation, I will take a quick moment to introduce our esteemed panelists today. I'll start with Noor. Noor is a founder partner of Global Ventures, based out of UAE. She's also the chairperson of Middle East Venture Capital Association. Uh, but yes, she has a lot more to her credit from the background. She was perhaps the first woman from the region who took a company public on Nasdaq Dubai and London Stock Exchange back in 2008. Congratulations, Noor. That was a big feat, I would say.
Thank you.
She has also been identified by Forbes magazine as world's top 50 women in tech. She has been recognized as a young global leader by World Economic Forum and 30 most influential women in Arab world. Uh, lot to handle. I don't know how you handle that much of credentials, Noor. We would love to talk, learn more from you as we move forward. Um, with that, I move on to Subramaniam Krishnan, popularly known as Subbu in the Indian private equity ecosystem. Subbu is partner with Ernst& Young Private Equity, Financial Services, and Tax practices. He's also a member of Alternative Investment Policy Advisory Committee of SEBI, the Securities and Exchange Board of India, advising consulting for over 20 years now. Subbu's publications are regularly seen on many of the known periodicals, Economic Times, Business Standard, Hindu Business Line, and so on in the country. A fairly well-known name in the private equity financial services industry in India. So welcome, Subbu. Look forward to have an insightful discussion with you around the newer policies that India has come up around the fund structuring and stuff around that.
Thank you.
Moving on, Stephen Barak Rozan. Stephen, an old and a good friend from Israel, based in Tel Aviv. He's partner with one of the leading and the largest law firms in Israel called APM. He leads or is partner with the high tech and the venture capital practice of APM. He has been rated by IFLR 1000 as one of the leading Israel's lawyers in the field of mergers and acquisitions and investment management. He's also recommended by the Legal 500 in the field of high tech and startups businesses. So Glad to have you on board, Stephen. Thank you so much for joining us, all of you.
Thank you, Rakesh. Thank you for
And
having me.
it's a pleasure. And I think I must start with saying that I'm honored to be part of this highly accomplished panel. And I'm pretty sure our audience are looking forward to some very insightful views and perspectives from all of you. With that, allow me to move on to the discussions. I think we can quickly start with the title of the topic or the conversation itself. How do VCs raise funds? We probably will start with that, and perhaps we'll get a little deeper, dig a little deeper into the finer points of fundraising, structuring, regulatory aspects, nuances, pains, and pleasures of raising the funds and founding them. But then I think the first thing that comes as a question when it comes to how do VCs raise fund for many of the early startups, particularly, I would say. So here, I must say that our audience is a mix of early startups, uh, uh, growing startups, and probably many of the angel investors, and perhaps some of the aspiring VCs. And I would not be surprised if there are some existing VCs as well who are part of this audience. But then, for the sake of the early stage startups, first time entrepreneurs, and many others, uh, I think the title itself is question. Do VCs actually raise fund? What does it mean they are raising fund? Don't they already have money? They are investing in us. So I probably will jump on to Noor, being a practicing venture capitalist here. Do you actually raise fund, Noor? Is it not your money? Where are you getting the money from?
Well, I think that some VCs, it is their money, and some, they have to raise the money. For the most part, I think that all, venture capitalists do go out and raise money. Some of it is our own capital, and that's called the GP commitment. It's usually about 2% of the fund. It ensures alignment between the GP, which is the VC, and investors, which we call our LPs, right? And so the LPs ultimately have to come in and say, okay, we believe that you as the manager, as the GP, as the VC, many different terms for what we do, are actually capable of going out and finding the best entrepreneurs and the best deals and giving them the right amount of capital and then coaching them to create returns. So that's why they give us capital. I mean, within our firm, the going expression is, people give us capital or give us money that we have to go out and raise in order to take risk and then pay us our fees in order to manage the risk. And so it's this very fine balance between, yes, we do need to go out and fundraise, and then the job is to make sure that we provide the best risk return profile.
Interesting. So you go out, raise money, people entrust you, or the investors entrust you with their money, knowing that you probably know where to invest, where to find the right people. But there are risks, as you said. But there are some very interesting points around risk which I would want to cover. But then you brought in some terms or abbreviations like GPs and LPs. Would you like to elaborate a little on that?
Yeah. So GPs are the general partners. They are what entrepreneurs refer to as the VCs, but ultimately, what we have is a structure where we are given the capital by our LPs, our limited partners, and we have the ability to invest that capital on their behalf.
Okay, so LPs, limited partners, the GPs, general partners. And general partners are the
Rakesh,
ones
just from a legal perspective.
Yes.
When you look at the structure of how venture capital fund, and it's not just a venture capital fund, it's many of the investment funds. They could be private equity funds or many other different names. They're all typically formed around what's defined as a limited partnership. That's the basic structure from a legal perspective. And a limited partnership, if you think of what's called a limited liability company, or an Inc. in America, or LTD in Israel, or a limited in England, it's where the shareholders have limited liability. So they're not responsible beyond a certain level of liability for the operations and the debt of that entity. So a limited partnership has the same concept where the LPs, the limited partners, the investors in the venture capital fund do not have liability beyond their commitment. But the people who do have liability is the general partner of that limited partnership. But then the structure gets complicated, of course, because Noor and other GPs don't want to have all of that liability personally on themselves. And then there's additional entities that are formed in order to hedge and kind of put all of that liability into a new company that was formed just to be the formal, from a legal perspective, the general partner.
Interesting. No, I think that clarity helps a lot because those terms, while there are pieces implied into those terms, but that knowing exactly how that works is definitely very helpful. In fact, we will further be digging into that structure part that you are talking about, Stephen. But then again, I'll probably take a quick jump back to Noor and ask. So, Noor, you spoke about managing the risk alongside, right? So somebody entrusted you with your money, but and you're raising the money per se. Is your, or for that matter, any fundraising process any different from the fundraising process of a startup that you are investing in? Do you go through the same pains? How does it work?
So, I fully respect the startup's journey, and I've been an entrepreneur myself and built a company and exited a company and then IPO'd a different company. So I've done the startup journey and exits in my operating life. And I will say that now we are a startup. So we're in the third year of our existence as a venture capital firm. We're deploying out of our second fund. And we're raising our second fund. And I will say, in my humble opinion, it's much harder to raise a fund than to raise money for a company. Because when you're raising a fund, you're asking investors to trust your decision on which companies to invest in. Mm-hmm. So they can't see the companies, they can't see the revenue stream. It's a blind pool is what we call it. So yes, give me a lot of money and then I'm going to go decide what to invest in. And they're investing in my judgment on other entrepreneurs. So they're investing in one person, determining whether another person is going to build a good company. Whereas when you go to raise money for a company, it's here's my product, here's my revenue stream, here's where we see this going, here are our clients. So it's very much you're investing in something that's more tangible. So that's the psychology. I think from an operational investing perspective and risk management, it's very similar. We have our DDQs, so our due diligence questionnaires. We ask entrepreneurs 70 questions. And when investors come to give us money, they ask us 70 questions. And our questions to entrepreneurs are, how do you manage? How do you grow? How do you manage your team? How do you build your revenues? And it's the same questions that we get asked from investors. So it's very much a similar DD process, except I think psychologically the hurdle is, can you trust global ventures to be able to go out and choose the best entrepreneurs versus do you believe this company will grow and succeed?
Awesome. So that's an interesting point. In fact, I will come back to you in a little while to check your perspective or ask your perspective of, despite all this, what makes this as an interesting asset class for your investors. But I'll come back to that. I'll go to Subbu. He's been patiently listening to us all this while. Subbu, we heard both Noor and Stephen talk about the structures of the funds. Right, whether it's around the liability, whether it's around the taxation, whether it's around certain other regulatory aspect. But then coming to you, we have seen it for a while, right? So again, we probably will come back and talk about the newer AIF regime. But before that, if we have seen VC ecosystem growing in India, almost every time it used to happen that somebody said that I'm raising money from a US-based fund, but fundamentally, when the papers come in, it appears that it's technically either a Mauritius or a Singapore fund, or maybe a Cayman fund. How are these things structured? What drives these kind of structures of the VC funds?
Sure, Rakesh. So essentially, if you look at broadly, I think everyone, the audience needs to understand that when you talk about funds, and I'm applying an Indian lens here, you're talking about two types of funds. One is, the global VCs who are set up with the objective of investing globally. and there are VCs which are dedicated or country specific. And there are a number of them which will be focused on investing, let's say, in countries like India, Israel, some other parts of the world where the startup ecosystem is buzzing, or maybe a combination thereof. As far as India is concerned, as you rightly said, a lot of the Indian entrepreneurs who are raising money from India dedicated VC funds, it may have a global brand name or an Indian brand name or a company title. Many of them have been set up for historical reasons in jurisdictions like Mauritius or Singapore. So it will be quite common for you to see a Mauritius entity or a Singapore entity being the investing entity for the Indian startup. And that's simply because historically India has had fabulous tax treaties with Mauritius and Singapore, and having tax neutrality in the fund structure, by that I mean zero tax at the fund level, is a very important ingredient when you think of a fund structure. Because what you don't want is a situation where you invest in a particular market, it's a multi-bagger, but you pay away a significant amount of money in taxes in the country you invest in or in the country where the fund is set up. So that's why you see a lot of Mauritius and Singapore. Globally, of course, if you look at a lot of the global VC funds, which may not have a very hard allocation to a particular market, it may not be uncommon to see a Cayman Island type jurisdiction for the fund, because it's amongst the largest jurisdictions in the world for fundraising or fund domicile in general. So yes, broadly speaking, keeping the AIF and the Indian sort of domestic setup aside, you would see a lot of Mauritius and Singapore for the reasons I described. When a startup actually receives a check or looks at documentation for investments, that's probably what they will see most often when it relates to Indian deals.
Sure. I think that's an interesting point. And again, I come back and probably with the point where what happens when these funds are actually investing in the companies which have caps on the FDIs, right? Not necessarily like tech, which can have 100% of the FDI as well, right? But then we'll come back. I'm going back to Stephen here. So Stephen, I'm curious, what is the structure that you see most prominent in Israel? And also, I'm curious from your perspective, what is it that Cayman is doing right, which many other geographies are not able to replicate? Why do we see so much of Cayman?
So historically, Cayman has been the gold standard for fund formation. Israeli venture capital funds have been formed there for many, many, many years. It's not a matter of hiding your funds. Right now, there's total tax transparency. The Cayman Islands has actually become one of the strictest jurisdictions from that perspective, to the point where it's becoming unpopular, and people are starting to shy away from actually forming their venture capital funds in Cayman because it's become so transparent and so onerous on its regulations. But going to a jurisdiction like Cayman simply was designed to ensure tax neutrality. That you could go there, the Cayman Islands would not tax you, it would be neutral, regardless of where you're coming from. If you're coming from the United States, you're coming from Israel, and then that entity could make an investment anywhere else in the world, and there would be no tax paid to the Cayman Islands. So basically, you would have to deal only with the taxes in the target jurisdiction of where you're investing, and the investors would have to deal with their own taxes of their home jurisdiction. So Cayman was neutral and allowed you to onboard investors from many jurisdictions into one single entity, and not have the Cayman Islands themselves become an issue. Now, from the legal perspective, it's the legal structuring there, the law is very clear, it's very advanced. Even in that, you can have advanced and less advanced structures as far as the law is concerned. So it's very clear from the perspective of the limited partners that they're going to have limited liability, what they are allowed to participate in. Many of the VC funds have what's called an advisory board or investment advisory board, where the investors take part in certain decisions, limited decisions. In some jurisdictions, that might be a problem and it might jeopardize their limited liability. In the Cayman Islands, it's very clear under the Cayman law that it does not, and that's just one example. So there's a lot of clarity in the law there. The law gets updated on a very regular basis. They're always at the forefront of making sure that if you want to manage your fund, your investment vehicle in the Cayman Islands, then you're going to have clarity as to a lot of questions, and it becomes very easy from a legal perspective to manage the fund. So it's been very attractive as a jurisdiction for many years.
Sure. And do we have any native fund regulations in Israel?
The truth is, the majority, by far, of the Israeli funds are not incorporated in Israel. They're incorporated in the Cayman Islands. So it's very common for an Israeli startup company, to receive an investment from a non-Israeli entity that is managed by Israelis.
Sure. Interesting. So, but then we just heard the term AIF from Subbu, which is for India. And going back to Noor, if, I believe you are also regulated under a native UAE jurisdiction. Is that right? So,
yes.
How does that differ when a fund is in the native jurisdiction versus one like Cayman? Does it restrict your ability to invest outside of UAE or whatever? I'm just curious, how does this work? Because you have seen both sides of it.
Yeah. So our ability to invest is based on the mandate of the fund rather than where the fund is regulated. And I think that's true across the board, but Stephen's a lawyer here, so he can, yes, great, we're nodding. So no, we're not restricted. We are big fans of the ADGM as a market in Abu Dhabi. We believe that the regulatory infrastructure there is very, very strong. It is new, and a lot of our investors in our first fund, when ADGM wasn't yet set up, and that was a Cayman fund, have asked just to maintain the Cayman structure, because I think that the lawyers are very comfortable with it, and it's a lot less work. Whereas when you introduce a new regulatory structure, it becomes a lot of work for the lawyers and very expensive for the investors. And so because of that—
I just want to concur, Noor, that ADGM and DIFC are becoming interesting even for Israeli venture capital funds, because Cayman is becoming problematic from a regulatory perspective. That, as you mentioned, people are now starting to look at the Emirati options, kind of like the offshore Emirati options, as opposed to the onshore Emirati options.
I agree. And so for us, we have the ADGM as an option and Cayman as an option for our fund. And we find that many US investors prefer the Cayman option. I mean, 60% of our investors are in the US, just because they're familiar with it. It's plain vanilla. It looks and feels like something they've done 100 times over. Whereas people who are a little bit more used to emerging markets are open to structures like the ADGM, and that's where we are regulated and licensed.
Okay, very cool. So if I take this conversation back to Subbu, now we see a lot of AIF thing in India, which is domestic regulated funds in India. I believe that it has probably brought a lot of ease to the smaller investors, particularly migrating from the typical angel network structure, individually invested, to a fund structure. Has it made any changes, or has it changed anything in the lives of the bigger funds as well? Or what is your perspective on AIFs?
Yeah, I think the way I would sort of respond to that, Rakesh, is I think there are a few things that have happened in India in the fund sector. One, that in the last, I would say, 8 years, ever since we've had the alternative investment fund regulations that were put out, which are much, much more flexible than what was the regulation that existed then. It has certainly become the structure of choice to raise capital meant for investing in across all asset classes. I wouldn't just say this is restricted to startup capital, but more late stage investment or even buyout type investments are increasingly being structured using an AIF. The government on its part in India has also been doing a lot of work to make the AIF the vehicle of choice to raise capital meant for India. But having said that, there are a few challenges, especially when you look at the startup or early stage investing ecosystem. And one of the points you yourself made, an alternative investment fund in India, unlike the typical parallel in the West, is a fund regulation. It's not a manager regulation. So fund itself is regulated by the capital markets regulator. And that means a whole bunch of regulation on what the fund can do, where can it invest. India is a closed, is a limited capital account convertibility geography. So there are limits on how much the AIF can invest overseas. And when you think of investing in startups or early stage sort of investments in India, as we all know, there is a big trend to externalize, if you will, ownership of Indian businesses, where investors prefer holding companies in countries like US, Singapore, or elsewhere. Those become then limiting factors for such AIFs. But generally speaking, I would say in the early stage of VC ecosystem, clearly, if there is an Indian GP who is wanting to raise Indian capital, he has to have an AIF because there is no other alternative to raise Indian capital. Indians cannot invest meaningful sums in an offshore fund which is meant for investing in India or predominantly meant for investing in India. That's not possible because India frowns on round tripping. And but as far as foreign capital is concerned, we still are yet to see meaningful instances of institutional capital getting comfortable investing in an AIF directly. So we still have structures where there are feeder funds in Cayman or Mauritius or Singapore type locations into which foreign investors invest, and they then make an investment as a feeder fund into an Indian AIF. So I would say on the balance, the AIF is picking up in quite dramatically. As you pointed out already, a lot of the angel networks are now operating through an AIF angel fund kind of structure. So, because of a lot of the tax incentives and other regulatory advantages, it's certainly becoming the vehicle of choice, but yet to see, meaningful traction for direct investment into the AIF, which is, I think, again, a work in progress item for the regulator and the tax administration to sort of work through.
So that was from the inward side of the supply chain. If we are looking at the investment, do AIFs have challenge investing abroad? So you have Stephen sitting here. Stephen says, I have some brilliant tech companies that you can invest in. Will AIF have a challenge doing that?
Yeah, that's what I said. So, the AIF, because India does not have capital account convertibility or full capital account convertibility, AIF under the regulations can invest up to 25% of their investable sums overseas. That's the regulation. And that too with an approval. So every time you make an investment, you need to essentially go to the capital markets regulator, put out an application to seek approval of the regulator to make that investment. And one critical condition there, to take the same example you took, is that the regulations only allow you to make an investment in a foreign entity which otherwise has an Indian connection. An Indian connection means a front office or back office in India. So if an Israeli company is, got a business that's focused elsewhere in the world and has no presence or business operations in India, then the AIF can simply not participate in it.
Understood. So is it okay to read that yes, AIF probably has a long way to go before the larger funds would fundamentally consider it, both from the raising money perspective as well as from the global investment perspective? Yeah, certainly. I would agree. Awesome. So, I'll come back with my questions. I see there are one or two audience questions which have come up. I believe that this would probably go to Noor. Noor, this says, what are the top 3 challenges while dealing with the investors? Creating a trust in the GP, and how do you deal with that?
So I don't know how I would define the top 3 challenges. I mean, I think it's important to think through the investor journey in their minds, right? So they're only meeting with you if they are interested in technology or investing in venture in a certain market, or at least they're curious. So the first challenge becomes turning that curiosity and interest into conviction. So, you need to convince them that this is actually an opportunity and here's how we can make returns, which then becomes a second challenge, is illustrating how you are the one to be able to find the best opportunities and to create those returns. So that comes from proving your track record and proving, that you've done this before. And finally, that comes in terms of transacting. So closing a few investments and maybe executing a few exits then provides the confidence So first, it's getting them convinced that, yes, this is an opportunity. Then it becomes, I'm the right person to do this. And then it becomes, and here's the proof. And I think beyond that, it's really about maintaining relationships and building confidence. These are very long-term relationships. Fund lives are 10 years, right? So it's something where it really is about making sure that there's an alignment of interest, alignment of philosophy, alignment of values, and that you really are working with people who believe in the same things that you believe in. That comes with time and spending time with people and building that out over the long term.
So does it get easier with your subsequent funds 2, 3, 4, or does it get more difficult because the expectations are higher?
I'm told it gets easier. I'm not, I know we're raising fund 2 during COVID and we're close to closing. So I don't want to jinx and I don't want to say that it gets easier, but I'm told it gets easier and I'm hoping it gets easier.
My best wishes for your fundraising.
Many times it depends on the track record, and it's tough because sometimes, if the life of a fund is at least 10 years, then you don't have a full track record before you go to raise your second fund.
True.
Yeah.
True. That's I believe probably third or fourth. I don't know. I hope it's convenient or comfortable for Noor for her second fund. But yeah, with what Stephen you say, it probably would be the third or fourth fund for me. By the time I probably would say that it was easier for me. But then, yeah, so we are about 4 minutes to the end of the session. There are two things which I would like to run through all three of you. One is, again, from both investment raising as well as the structuring perspective of the fund. And those two questions goes like, one, if you have to advise your government to make it more friendly for the funds to be operating out of their jurisdiction, what should that be? And second, what would be your probably one or two top advice to the entrepreneurs who are now planning to turn an entrepreneur, or maybe the first time VCs for that matter, as I wanted to say. So I'll start with you, Stephen. Top two points: government and VCs. Advice for them.
Well, Israeli funds, by definition, nobody forms or invests in an Israeli fund in order for the Israeli fund to invest outside of Israel. Israeli funds have a mandate of investing in Israeli-related companies. So if you're interested in investing in a fund that invests also in Israel, and there's a lot of funds that do that, but they're typically not Israeli funds. So we get a lot of American VCs that come and invest also in Israel. From an Israeli government perspective, there's no restrictions on investments in Israel. There's no restrictions on the flow of capital inside or outside of Israel. We got rid of those about 20 years ago. So it's very open, no foreign currency restrictions. So from that perspective, the Israeli companies and any venture capital fund, Israeli or not, can freely invest in Israel. Israeli investors invest outside of Israel in non-Israeli funds if they're ultra high net worth, or institutionals. We have a lot of institutionals in Israel. There's a mandatory pension system that goes through the Israeli institutionals. So they're always looking for opportunities.
Sure. But so even if you don't put it straight, if I read it and interpret it, you say, okay, guys, if you have to plan something for Israel per se, it's okay to go for a Cayman fund.
Oh, for sure.
Sure.
It's very few VCs are actually formed in Israel. Our law, which is funny because we're the startup nation, but our legal structure for venture capital funds is not at all advanced. And there's been many ideas and proposals over the year from the Israeli Ministry of Justice to bring our law in line with the most advanced jurisdictions, but it just hasn't happened up till now. But it's fine. Sure. We work fine through Cayman Islands, BVI. We've done Luxembourg. So there's many different opportunities, and now we're looking at ADGM, DIFC for the Emirates.
Sure. So, but you say from the FDI perspective, the government is already doing a good job.
Yeah, no problem. We could make things a little bit easier. Israel has a little bit of red tape and bureaucracy, but it works fine. We know how to do it. We've done it many times. Funds are formed here all the time. Foreign investors are coming and investing in Israel all the time. Israel, from that perspective, is attractive in that they will typically not be taxed in Israel. on their investment in Israeli companies. So the foreign
Sure.
investors will really 99% of the times pay no capital gains tax in Israel.
Sure, understood. So Subbu, same question to you.
Yeah, I would say, Rakesh, that I think the Indian government hugely already recognizes the substantial value a country can have from having a fund industry domiciled in India. While of course we've always welcomed foreign capital, and I don't see that trend changing. I think having funds in India just helps, brings a multiplier effect to the economy, as we all understand it. And I think we are probably a little more than midway in that journey to ensure that AIFs, as far as India is concerned, can become the vehicle of choice for, as I said, Indian capital meant for investments in Indian businesses, whether set up in India or overseas. Sure. I think we are probably there. There are 2 or 3 very key points, which again, the government is quite cognizant of, which is to essentially put foreign investors in the exact same position as they would have been had they participated in the same investments in India through, let's say, Mauritius, Singapore, Cayman, or whatever other fund. And some of those are just rule changes. But what I would also sort of, say over the top of all of this is that ultimately jurisdictions for fundraising get comfort of investors over a long period of time. As in, it took 15 years for Mauritius to sort of convince investors that it was a good jurisdiction to invest into directly. And that's the same journey that an AIF is going to take. But I think we'll get there. We're already seeing a lot of multilateral institutions invest in AIFs directly. That's something which is already happening. And I don't see why we can't get to a point where a lot of the other fund of funds and institutional investors are willing to do the same. As far as new VCs are concerned, I would say structuring and how you set up, I think, is the last of their concerns. I think, I would probably still say that, where do they raise capital from? What's their track record? I guess those are more pertinent questions. Structuring is more, I guess it's more about crossing the T's and dotting the I's. There are enough options available in the market and well oiled for them to sort of choose from based on what their priorities and objectives are.
Awesome. Thank you. Noor, I'll change my closing question for you. As I've said, I will come back with that question, so don't want to miss that opportunity. Just wanted you to comment why, despite all the risk with the early stage investments, I don't know what's growth stage probably is a different case, but particularly early stage investment, for all the audience watching here who have the super deep pockets as well, why is it an asset class that they should seriously consider?
So I'll talk to the region because that's what I'm most familiar with. So across kind of the MENA region, and we invest across Middle East and Africa, but specifically MENA, it's a very fast growing space right now. So it's one of the most undercapitalized venture ecosystems in the world. We have 0.02% of GDP in venture as opposed to like 0.2% like India, for example. But so far this year, in the first 3 quarters, we had about $800 million going into deals across the entire region, across all deals. This shows you how small it is. But that's equivalent to the entire of last year, right? So there was about 542 deals. As opposed to 360. So you can see the deal sizes are getting larger. We're at an inflection point. The governments and regulators are getting behind it. Fintech is booming. Even this morning, there was a big article in the FT about fintech. So fintech specifically has gone from 50 million to 70 million from all of last year to quarters. So when we think about just like the region's ecosystem, it's booming really fast. It's the fastest growing in several sectors globally at this point. And there's a lot of talent. There just isn't a lot of capital. So when we think about the region and why it's the right time and the right place, especially in certain sectors like fintech and digital health and innovation, we think about the opportunity for growth with mitigated risk and the opportunity to create outsized returns given the risk. And given the fact that, of the 400 million people, 50% are under the age of 30. So it's one of the highest digital penetrations globally with the highest opportunities for growth. And now with, as Stephen mentioned, ADGM as a new regulator and DIFC as a regulator, you have the regulatory infrastructure and frameworks and the government's getting behind the ecosystem. The sovereign's starting to invest in it last year. So it's really the time for high growth here.
Very cool. No, thank you so much for sharing that. And my best wishes again for your fundraise. With that, we come to the close of our session. Thank you so much, everyone, for giving me this pleasure and honor hosting you today. I am pretty sure that audience have found it very insightful discussion. We look forward to be in touch with you. But then again, your time is highly appreciated. Your knowledge sharing is highly appreciated. Thank you again so much for joining us this morning.
Thank you, Rakesh.
Thank you.
Thanks, everyone.
Thank you, Rakesh. Thank you all.
Thank you, everyone. Thank you so much, all the esteemed panelists. Thank you.
Thank you.